Hey everyone, welcome back to Corporate Decoder, the place where we try to find out if companies are actually as successful as they say they are, or if it's just a bunch of accounting magic. We're diving into Cohen and Steers Inc. Q2 2025 report, and let me tell you, it's a mixed bag of good numbers and some things that make you scratch your head. So Cohen & Steers is a big investment management company. They handle things like real estate, preferred securities, and other investments for people and institutions all over the world. They've been around since 1986. First up, let's talk about the money coming in. They brought in $136.1 million in revenue for the second quarter of 2025. That's up 11.8% from the same time last year. This increase is mostly because they're managing more money for people, which is generally a good thing. It means more clients are trusting them with their investments. They make their money from fees on these investments. Now, even though revenue is up, their operating income, which is the profit from their main business activities, actually went up by a smaller amount. It went from $38.4 million to $43.3 million. That's a 16.9% increase. This means their costs also went up, and we see this in employee compensation and benefits, which jumped by $3.5 million. General and administrative costs also climbed by $3.3 million. This shows they're investing more in running the business, which could pay off later, but it eats into profits in the short term. Let's look at the company's overall financial health. At the end of June 2025, their total assets were $705.12 million at the end of 2024. This decrease is mainly because their cash and cash equivalents dropped quite a bit from $18.3 million to $95 million. That's a big chunk of cash gone. On the flip side, their total stockholders' equity, the amount owned by shareholders, actually increased. It went up to $541 million from $521 million. This is a good sign, suggesting the company itself is worth more. Now, for the bottom line for shareholders. Net income attributable to common stockholders was $36.8 million for the 3 months ended June 30, 2025. That's a decent jump from $31.7 million in the same period last year. And on a per share basis, diluted earnings per share came in at 72 cents. This is up from 63 cents last year. So shareholders are seeing better profits on each share. Looking at the first 6 months of the year, net income is also up. It reached $76.6 million compared to $65.7 million in the first half of 2024. That's about a 16.6% increase. Diluted earnings per share for the first half of the year were $1.49, up from $1.31 in 2024. Let's talk about what's driving these numbers, their assets under management, or AUM. This is the total value of all the investments they manage for their clients. At June 30, 2025, their AUM hit $88.9 billion. That's a 10.2% increase from the previous year. Most of this growth came from their open-end funds. These are like mutual funds that people can easily buy and sell. Their AUM in these funds grew by 14 from their open-end funds. These are like mutual funds that people can easily buy and sell. Their AUM in these funds grew by 14.7% to $43 billion. That's a big chunk of their business. All institutional accounts, which are big pools of money from things like pension funds, also saw growth of 6.7%, reaching $34.4 billion. Closed-end funds, which are a bit trickier to access, saw a smaller increase of 5% to $11.6 billion. Within their strategies, US real estate is a big one. Their AUM in this area grew to $43.9 billion. This is a positive sign, showing continued investor interest in this sector managed by Cohen & Steers. Preferred securities also saw a slight decrease in SUM, falling to $17.9 billion from $18.1 billion. This small dip might point to some investors pulling money out, or perhaps less market appreciation in this specific asset class. Now, here's where it gets a little more complex. Companies sometimes report as adjusted or non-GAAP numbers. Cohen & Steers is no different. They present these to give a clearer picture of their core operations. By excluding certain items like changes in seed investments or one-time expenses, for example, their net income attributable to common stockholders as reported by JAPO was $37.3 million. This exclusion of certain items like seed investment performance and one-time expenses is common practice, but it's always good to look at both the official numbers and these adjusted ones to get the full story. Yeah. A big compass books. Looking ahead, the company does mention risks. They're exposed to market fluctuations, interest rate changes, and currency rates. This is pretty standard for an investment manager. If markets do poorly, their revenue goes down because the value of the assets they manage decreases, and act to provide for reconciliation pursuant to Title 2 of H-Config C. Interestingly, they mention a new tax law signed by President Trump on July 4, 2025. They're still figuring out its impact, but don't expect it to be huge for them. All in all, Cohen and Steers had a pretty solid quarter. Revenue is up, profits are up, and they're managing more money. The decrease in cash is a bit notable, but their overall equity position improved. We should keep an eye on those rising expenses though, and also how their adjusted numbers compare to the real Jabat numbers. It seems like a healthy company that's growing its core business, but like any financial firm, it's definitely tied to the ups and downs of the market. Alright, that's our breakdown of Cohen and Steers' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord group linked in the description for more exclusive content and to connect with fellow analysts. Thanks for watching. See you next time.